What's up, cool kids? FD White. Welcome back to the channel, man. So I'm watching Bitcoin right now. We're sitting at about 95,376. We are coming up on a little bit of support. So we want to see how the weekly closes and the weekly opens at the same time a little bit later right now. So I say about almost 12 hours. We got about 11 more hours before the weekly close. Bitcoin is getting a little pullback. We are on support. Looks like if we break this support around 95K, we could potentially go down to about 93K. So the range will be between about 93K and about 95K. So looks like we are trying to, I don't know if you can, nope, you can't see that, but it looks like we are trying to break down from the high of about 98K. We talked about this over in the Cool Kids Telegram. Make sure you guys go over and hit that. It will be in the pinned comments. We talked about if we broke out of that 93K, 93, 94, we're probably going to go tap 98,000, 98 to 99,000. So we did tap some exchanges a little over 98K, but right now we're going to continue to watch this. We're going to continue to watch also Bitcoin dominance, because this has been a Bitcoin led rally. We have seen some things pump tremendously, but for the most part, this is Bitcoin. Let's look at Bitcoin dominance. Actually, Bitcoin dominance right now, and this is what we're watching. We have breached that 65% level. Right now, we got a small little pullback to about 64.9, but we are watching that 65 possibly going up to about 68, 69, maybe 70% for Bitcoin dominance. I didn't think we were going to get this high. I thought we were going to probably get to, well, earlier in the cycle, I thought we would probably get here. But now at this time, if it was about a year and a half ago and you would have asked me where I thought Bitcoin dominance would be right now at this specific point, I wouldn't have thought we would be this high. But this cycle is totally different. This cycle has changed. So we take what the market gives us. We have our cards. If those cards are not working, we put them down and we pull from the new deck so we can continue forward. So we don't want to be super stuck in what's going on. We always talk about being fluid, being diversified. Well, not diversified, that's not the word I'm looking for. Just able to change on a whim. If something changes, or if some market conditions change, or if new information, new data comes out, or if Trump tweets, then we have to be ready for whatever. Looks like the trade wars are simmering down a little bit, which is causing the NASDAQ, all of the stocks, the indices, to pump a little, especially the tech stocks. And then we have seemingly more reports coming out of some good news potentially this week and going into the future. We do have, I think, about maybe 70 to 60 to 70 more days before the tariffs are revisited. So we'll see if we get more of a pull down or more of a drawback from some of these tariffs, especially China. We've been watching this China thing. China has been taking off a few tariffs from us. We've been taking off a few percentage points from them. So it seems like okay, we now realize that these huge tariffs, this posturing, all this other stuff is not really working. We need to really come to the table slowly but surely and try to help our economies, because trade wars don't help anybody. They just hurt all parties involved. It seems like. I'm no economist, just a dude from Detroit who did his homework, but that's what it's seeming like. And a lot of people are saying that. A lot of smart people are saying that, and it seems like that is what is happening in our economy. These tariffs are messing with our economy very badly. Next, since we're talking about the macro environment, let's go over a quick rundown of what's happening this week. So Tuesday, we don't have anything that I'm really concerned about on Monday. On Tuesday, we do have the 10-year bond auction. And this is the reason why Trump had to reverse some of that tariff news, or reverse some of those percentages, or give the markets, throw the markets a bone, because the treasuries, the bonds were getting hammered. So the interest rate kept going higher and higher. So we do have the 10-year bond auction. So we'll see if people step up, buy some bonds, buy some treasuries and things like that. Well, this is the 10-year bond. So we'll see if some people come in and buy the 10-year. The 10-year is very pivotal in our economy. It dictates interest rates. It dictates mortgage rates. It dictates a lot of things. So we're going to watch the 10-year bond auction on Tuesday. That happens at 1 p.m. Then on Wednesday, this is what everybody's going to be talking about. We have the FOMC decision, the statement, and the press conference. So this is what we've been waiting on to see if the Federal Reserve is going to raise interest rates. Popular consensus is no. They're going to keep it at around 4.5. So we're looking to June, I think. June is the first, I think this is the first time I think everybody thinks that they are going to cut rates. So it's hard to navigate, because we had our plan, and then we'll continue so we don't make this video too long. We had our plan of how the Federal Reserve would step in. We thought, okay, they tightened for so long, 2022, 2023, 2024. We thought end of 2024 that we're just going to continue to start lowering interest rates. It hasn't happened like that because inflation has proved to be a little bit more sticky than we thought. So with this being said, where am I at? With this being said, now nobody knows what's going to happen. A lot of people come on the internet, they come over here, and they talk to you like they know exactly what's going to happen. FD not going to do that. FD is going to tell you what I'm thinking, give myself and you, since you're watching, a couple scenarios, and then we're going to be prepared. I'd rather be prepared than act like I know everything. So this is what I'm saying. Now, if the interest rates start coming down and how fast they start coming down, why? Why are they coming down so fast? Why would they be coming down so fast? Or why would these interest rates start to come down so heavy? Maybe there's something in the economy that is broken. Maybe the tariffs have broken something. So we got to see. A lot of people are saying that the summer is when we really will start seeing the effects of these tariffs. We really will start seeing the effects of what's going on with the Trump administration and how we are separating ourselves with the world. Let's talk about this really quick and then we'll get back to this. Biden did this as well with the sanctions. Or I don't know if Trump started the sanctions and Biden continued with the sanctions. Somebody correct me down in the comments below. But the sanctions, this is like a repeat of the sanctions in aspect of the other countries are looking like, okay, with the sanctions, we don't want to be super dependent. We still have to be a little bit dependent or a lot of bit dependent, but we don't want to just be solely dependent on the United States holding our money and doing this. And when we act up, they can just take our money or freeze our money or do whatever. So we're going to slowly start to get away from using the dollar, slowly start getting away from trading with the dollar, interacting with the dollar with, different countries and things like that. So this is another thing. Now they're looking like they're stepping back. Countries are stepping back like, okay, we got another basically 3.5 years of this guy. He's very volatile. We don't know if we're going to step on his toes. He's going to wake up one day and just say, you know what? Let's just slap some tariffs. Let's do some embargoes. Let's do this. Let's do that. So now countries are probably looking like, we need to start making small baby steps to get away from doing all this trade with the United States. We're a consuming nation. We consume the most probably out of anybody times 2 or 3. So if they do just pull the rug, so to say, and don't do any business with us, their economy is going to suffer just like ours, probably worse. So they can't just all outright just stop doing business with America. We do still have the upper hand, in my opinion. Like I said, I'm no economist, but from what I see, what I consume, and how I take in this information, it seems like we do have a bit of an upper hand right now. But the way things are going, the way things are being laid out, the way we're posturing about the world and kind of bullying, I'm not left or right, I'm just telling you how it is, kind of bullying these countries into doing what we want and how we want. I'm pro-America. I want all this manufacturing and all this other stuff to come here. I want to build here. I want to do this, but I'm also realistic, and I know a lot of that is BS. So that's just my little quick rant, man. I hope I didn't lose any subscribers or lose anybody during that rant. But a lot of countries are starting to get away from doing business with America, probably behind closed doors, because right now, like I said, dog is volatile. He can wake up, slap more tariffs on, take them away, do this, do that. Like it's wild times right now. So back to us and what we're going to be doing in this market. We're going to be fluid. Like I keep saying every video, I'm going to keep repeating that, being fluid. Making sure we are paying ourselves if we're trading, making sure we are riding the wave, because the waves are going to be huge. If you catch a move to the upside or to the downside, it's going to be huge, because the impact on the data, the impact on tweets or whatever he's doing, Truth Social, the impact of these so right now are huge. So if he says something that's positive for the market, it's probably going to be positive for a few days or a few weeks. If he says something that's negative, it's probably going to be negative for a few weeks. So we can take advantage of that volatility if we're trading, or if we're just short-term. Well, short-term investing is basically trading. So we're going to continue to monitor that. So like I said, Wednesday, we do have the FOMC interest rate hike decision. Seems like they're going to pause. And then Thursday, we have the non-farm productivity. I don't know what that is, but it seems like it's important. And we have the unemployment claims, so we're going to be watching that. Previous was 241K. The forecast is going to be 232. So if we start to get in the 300s, from my prior knowledge of what I've been reading, if we start to get that unemployment claims in the 300s, then that is going to be a problem. 300 to 350, I think that was the starting to get the worried part, if it starts to get in those areas. So watch out for that unemployment claims coming out at 8:30 a.m. Eastern time on Thursday. And then Friday, we just have a bunch of people speaking, a bunch of Fed members speaking. Let's go back to the crypto market really quick. I'm gonna give you 30 more seconds. Well, give me 30 more seconds of your time. Altcoin market. We talked about Bitcoin dominance at the beginning of this video. We do have some outliers that have been running, but for the most part, if we can get Bitcoin over 100K and it starts to just possibly just chill for a little bit, and Bitcoin dominance comes down, I don't know if that's going to happen, because Bitcoin has been looking very strong against the rest of the market. Then we can get some sort of a push in some altcoins, a short-term altcoin season. I hate to use that word, I'm sorry, but maybe we can get some sort of an altcoin season, maybe like a week or two. It's going to be very concentrated though. Altcoin seasons from here on out seems like they're going to be very concentrated to a few coins or maybe a sector. So you have to be, you have to know where to look, where to buy, how to play the game, because it's basically a game. It's sort of like a casino, but with better odds if you do homework and if you know where to look, you know. So it's sort of like that right now. And then we've been trading equities, we've been trading commodities, especially gold. So if you want to trade those, we tokenize them over on BTCC. BTCC is the place where you can trade gold, silver, all the other all the major indices, all the major tech stocks over there. So BTCC, that's what I'm using right now. That's my exchange of choice, because you can trade gold, you can trade these other commodities, and you can trade equities, like I'm saying. And what I'm doing is, gold has been very, very easy to trade. Not easy, but very, very respective of levels. So we're going to continue to trade gold, stack our bags, pack our bags, buy more Bitcoin, buy some nibble on altcoins, and just go from there. So that's basically what I'm doing, what's going on during this week, upcoming week, what I'm watching for Bitcoin, like I said, to potentially come back down to a 93. A lot of people are saying an 87K area is also a high area of interest. It's the monthly VWAP, the April monthly VWAP. Shout out to FG, shout out to Flap and Groper. He's big on VWAPs, and his VWAPs have been working, so shout out to him. So I think 87K is another level that he's talking about. A lot of people, I've seen a lot of other people talking about. So just stay aware. Don't fall into a certain narrative. Of course, we're bullish long term. Bitcoin is the best asset in the world, ever, probably, so far. So we're bullish when it comes to long term, but when it comes to short term, when it comes to altcoins, be cool, be calm, be collected. We cool kids. We're here to make money. We're here to change our lives. We're here to take care of our families. And we're here to just, you know, be on the outside where everybody's panicking, everybody's doing all the other stuff. We keeping it cool because we know what's happening. We know how to make money in uncertain times, and we know what the future holds and how we can prepare ourselves for it and prepare our families and secure our future. So that's really what I'm going to start preaching a lot more over on the channel. And we're just going to go from there, man. So I appreciate you for taking, it's going to be about 13 minutes and 50 seconds of your time. Usually I like to speed my, when I'm watching YouTube, speed it up so you can cut that in half. That's a YouTube hack for you. So if you want to get more information quicker, put it on 2x speed. I sound good on 2x speed as well. So make sure you watch me over on 2x speed. Go down my list. See what I've been doing. See the calls that I made. See how I'm always cool. I'm always calm. Like, this market is very volatile. It plays with your emotions. Not to mention what's going on in the world. Everything in the world is going to play with your emotions. At least when you come over to trading, at least when you come over to investing, you can have an even kill attitude. So, because when you got more money, you feel better. I'm just going to let you know. When you got more money, a lot of these other world problems don't feel as bad. I'm just going to keep it 100 with you. So, it's FD White. I appreciate you for watching. Make sure you like, subscribe, hit that algorithm. The algorithm is very hard to get in. So, hitting the like, hitting the subscribe, leaving comments, multiple comments, likes, things like that, going down my list, watching some of my playlists. I appreciate you. I'll talk to you in a minute. Happy Sunday. See you in the charts, and see you at the charts a little bit later. Peace.